Welcome back. You're tuned in to Inside Out. Well, the stock on our Swotlight segment is Skipper Limited. The company has three broad segments, namely manufacturing for transmission and distribution structures, which consist of power transmission towers, power distribution poles, and telecom towers, among others. They also have a small but growing brand in the polymer segment. That includes UPVC pipes, CPVC pipes, and HDPE pipes. Smallest part of their business is infra projects. That includes transmission line EPC, telecom EPC, railway electrification, and water EPC. Now, the quarterly performance, well, it's improving. And in Q4 FY23, they delivered their best revenues, which exceeded 650 crores odd, with both the engineering and the polymer products business growing in excess of 20%. The margins as well, they've been steadily improving on a quarter-to-quarter basis all of FY23. Now, over the last few years, well, growth has been a little bit disappointing. It hasn't been great, really. But the management has indicated from year on they intend to grow by 25 to 30% for the next 3 years. Vertical-wise, well, let's give you a little bit more clarity on the revenue breakup between segments. The engineering products business, well, that's the largest revenue contributor with the best margins at around 12.8%. The management says there is scope for the overall margins to get even better from year on the back of better quality contracts and increased share of engineering export business. This will be further aided by the polymer segment as it attains scale and size, which will be benefited from fixed costs getting rationalized over a larger revenue base. The management says that they also position to grow exports from the existing 50% of engineering revenue in FY23 to around 75% in the next few years. Now, the year-end closing order book for the company was around 4,500 crores odd. That's the highest ever in the history for the company, of which exports accounted for around 20%, and the share of non-T&D products, including railways and telecoms, that increased to around 62%. But this is higher as they secured a single largest order win of around 2,500 crores from BSNL during FY23. Additionally, the company is actively pursuing projects worth around 6,600 crore rupees, that's on the international business front, and around 3,500 crores domestically. And in the past month itself, they won orders to the tune of more than 1,135 crores from both domestic and the international market. Well, in FY23, the company made the right moves on the balance sheet as well. The total debt, well, it reduced a little bit. That's despite having higher sales. This was primarily on account of better working capital utilization and better collection from debtors. Well, let's wind this down with the shareholding pattern and the valuations. With regard to the shareholding pattern, well, the promoter entity holds close to around 72% stake in the company, and you have FIs that own close to around 9.5%. While even if you analyze its healthy Q4 FY23 numbers, it's trading at around 16.5 to around 17 times. So the company will have to deliver something phenomenal from year on to justify this recent run-up in the stock. The big question is, how much of it is in the price? Well, we've completely run out of time on this edition of Inside Out. It's goodbye from Sonal and myself, but you do write to us and tell us about companies you want to discuss and you want to hear about. We'll try to feature them on the show. Thanks so much for watching.